Hi, I am Bhavya. In this video, I will be talking about evolution of insurance industry in India and discuss briefly about divestment of LIC of India. In economic terms, anything that cut down risk is known as insurance. Insurance has deep-rooted history in India and was mentioned in the writings Manusmriti, Dharmashastra, and Arthashastra. The writings talk about pooling of resources that could be redistributed in times of calamities. Probably this is a precursor to modern day insurance. In 1956, Government of India had nationalized the life insurance business and took complete control over it. Opening of private life insurance companies was prohibited at that time. Motivation behind nationalization has two objectives. First one being to spread message of insurance for greater social benefits, and second being mobilizing people's savings for nations building. LIC has been the biggest investor in government's process of planned development purchasing government securities and equities of big assets. In 1971, the government nationalized 107 Indian and foreign private companies playing in general insurance segment, forming General Insurance Corporation of India. In the era of economic reforms, GIC was notified as the Indian reinsurer in 2000 and then was withdrawn from holding company status of four public sector general insurance companies in 2002. In 2002, government had set up agriculture insurance company of India Limited, dedicated to agri insurance companies for serving needs of farmers better and move towards sustainable agriculture range. Under the process of economic reforms, an insurance reforms committee was set up in 1993. The committee report suggested decontrolling insurance sector, which government did in 1999, passing IRDA Act. It suggested to restructure LIC and GIC, cutting down government holdings in them to 50%. It suggested delinking of GIC and its four subsidiaries, which was done in 2000, and to discard the system of licensing surveyors by controllers of insurance. It also suggested to restructure the Tariff Advisory Committee and to set up a regulatory authority for the insurance industry. As insurance is a very risky business, reinsurance business emerged out of reality. In 1978, Deposit Insurance Corporation and Credit Insurance Corporation were merged into DICGC. As Indian companies faced many political and commercial risks in importing countries, Export Credit Guarantee Corporation was set up to provide adequate credit insurance cover to such firms. With the view to remove redundant provisions in the insurance laws, empowering the IRDA to enable more effective regulations and enhancing foreign equity investment capital in an Indian insurance company with the safeguard of Indian ownership and control, Insurance Law Act 2015 was implemented. Some of the major changes as per the Act for are promotion of foreign investment, consumer welfare, empowerment of IRDA, promoting the reinsurance business in India, strengthening of industry councils, etc. Insurance companies accumulate huge funds which is generated from the premiums they collect from the policies offered to the customers. These funds are invested in different ways and they substantially contribute to the economic growth. Also, insurance companies help business mitigate risk leading to prospering business contributing to well-being of economy. The latest declaration and a big surprise made by government is the last union budget with the news of initial public offering of Life Insurance Corporation of India. The government has decided to sell a part of the share in LIC. LIC IPO is a portion of the strategic action of the Financial Ministry with the target of raising 1.05 lakh crore rupees. LIC disinvestment will benefit the government to concentrate on critical economic aspects of India and bridging the gap of physical deficit. LIC will effectively bring strong competitors for contributing to the divestment plan when the insurance industry is gradually spreading up in majority way in India, thus moving from a concept of one company show to a quite a lot of companies. This IPO will be able to appeal the foreign investors and other investors as well globally. And if all goes as planned, then this will be a huge success of the India's government to be able to bring a fresh money into the Indian economy. But still, there are some issues that need to be tackled before the proper implementation. The issue of issuance of guarantee of about 300 million users of LIC policies will be the first problem to be dealt with. And the process of settling the terms for the IPO will take 4 to 5 months, and even when done, the sale can only be done after waiting for right market condition. And also, the plan would take about a year to materialize as there are a lot of legal hurdles. The government will moreover have to negotiate with the employees of LIC who are already opposing the divestment.